I think it's going to be crypto ET-palooza. We're going to see 1,000 crypto ETFs.
Bitwise Asset Management's Bitcoin ETF pioneer Matt Hougan is on WealthTrack.
Funding provided by ClearBridge Investments, the Fairholme Foundation, First Eagle Investments, Bill Miller, Miller Value Partners, Baird, Strategas Asset Management, Research Affiliates, Royce Investment Partners, Seafarer Capital Partners, and Women Investing in Security and Education.
Hello and welcome to this edition of WealthTrack. I'm Consuelo Mack. Whenever we need a refresher course on Bitcoin and other cryptocurrency products, as well as ETFs, we call this week's guest. He is Matt Hougan, one of the world's leading experts in both crypto and exchange-traded funds. Hogan was an early believer in digital currencies and a pioneer in making them accessible to individual investors through indexes and ETFs. He is Chief Investment Officer and former Global Head of Research at Bitwise Asset Management, a cryptocurrency asset manager, which is the world's largest provider of cryptocurrency index funds. In 2017, the firm launched the world's first and largest cryptocurrency index fund, the Bitwise 10 Crypto Index Fund, which holds the 10 largest crypto assets weighted by market capitalization that pass Bitwise's institutional risk screens. More recently, it was one of the first firms to create a Bitcoin ETF. The Bitwise Bitcoin ETF was released in January of 2024. Along with Bitcoin, it has more than doubled since then and now is nearly $5 billion in assets. Hogan is a noted trend spotter. He was an early proponent of ETFs and was CEO of ETF.com, where he led the development of the first ETF data and analytics platform. He was also a three-time member of Barron's ETF Roundtable. At Bitwise, he has been closely involved with the creation of its indexes and ETFs. Now, for years, Hogan has been predicting that digital currencies and related products would eventually go mainstream. He says that prediction is now a reality. I asked him what's changed.
It has gone mainstream. The mainstream era is here. We've really seen three huge developments. The first was in January 2024 when we got the launch of the spot Bitcoin ETF. This made it as easy to buy crypto as it is to buy Apple stock. And all of a sudden, people who didn't do it because it was too hard or it didn't have a regulated product were able to do it. That was a massive advance.
I will add that Bitwise was one of the first to launch with those 11 initial Bitcoin ETFs.
That's right. We were proud to be part of that moment. And for what it's worth, Consuelo, that's been the most successful ETF launch of all time, which is an incredible fact. ETFs have existed for 30 years. There are over 8,000 of them. The fastest growing launch of all time were those 11 initial Bitcoin ETFs. It just shows the level of demand. So we got a product that made it easy. And then the next change is we went from an environment where US regulators were actively hostile to crypto to an environment where US regulators are actively supportive of crypto. We now have the chair of the SEC saying all financial assets are going to move onto blockchain-based rails. That's been a real sea change that has allowed mainstream investors to really embrace the market. And then the last thing is we've just seen more and more investors do it, and it's like a snowball rolling downhill. Today, the Harvard Endowment owns Bitcoin. The Abu Dhabi Sovereign Wealth Fund owns Bitcoin. BlackRock's largest fund by revenue, it's the largest asset manager in the world. The fund they make the most revenue on is a Bitcoin ETF. Now it's really mainstream. It's no longer scary. And I think that's just going to continue for the next 5 to 10 years.
What is it about Bitcoin and cryptocurrencies that has led to this explosion of interest and products?
At the bottom of it is that this is a transformative technology. This is not like a small innovation. This is a massive innovation. Just like the internet let information move over computer networks, crypto lets money and financial goods move over computer networks. So as big as the internet was to the news industry, the retail industry, the media industry, crypto is that big to the financial services industry. And I think all that we were waiting for was a positive regulatory environment, some technological improvements to unleash that potential. And that's where we are today. You know, crypto is 15 years old. 15 years into the internet boom, the internet still wasn't common, but it was starting to penetrate society, and we're seeing the same playbook play out here.
And it's not just the cryptocurrencies, it's the blockchain, right? It's a new way of doing financial transactions that actually have value as well.
I'll start with an analogy to go back to that internet example. 20 years ago, if we were talking about the internet, the biggest company in the space by far was Google doing search. And people thought the internet is search on the World Wide Web. But of course it was more than that. You could use the internet for shopping, that was Amazon. You could use the internet to stream video, that was Netflix. You could use the internet for business, that was Salesforce. You could use it for travel, that was Expedia. There were all these different things you could do with the technology. The same is true in crypto. The biggest mistake people make about crypto is they think of it as cryptocurrency, and they think they're sort of all the same. Bitcoin and Ethereum, which is the first and second largest asset, are as different as Google and Amazon. And just to say a word about that, the way Bitcoin is used in the world today, Consuelo, is it's used like digital gold. It's used to store wealth in a digital format outside of a government or a bank, in the same way we use gold to store wealth outside of a government or a bank. And that's a big market. That's a $25, $30 trillion market. The way Ethereum is used is it's used to move US dollars and stocks and other financial assets around the globe at the speed of light 24/7, 365. It's the same core technology. It's a blockchain. A blockchain enables money to move over the internet. You can use different things. You could move digital gold or you can move US dollars. The reality is today, I can move $10,000 over the Ethereum network in a second for a fee of a penny to anywhere in the world. If I tried to do that through a bank, it would take 2 days, the fees would be high, and I don't even know when it would get there. It's just a better way to do almost everything in finance, and they're as different, again, as Google is to Amazon. That's the scale of sort of the differences between these different assets.
A cynic would say, when they look at somebody like Larry Fink, co-founder, CEO of BlackRock, the largest money manager in the world, he says that Bitcoin is a legitimate alternative investment. And he says that, in fact, it's the equivalent, as you just described, of digital gold. The skeptics would say, yeah, well, Larry Fink is making a ton of money on his new iShares Bitcoin ETF. And this is a new product, a new revenue stream, and that's why Wall Street is jumping on this bandwagon.
Well, they're not wrong in that Wall Street likes to make money. Larry Fink is embracing it in part because there's a commercial opportunity, but there's only a commercial opportunity because pensions, endowments, financial advisors, individual investors, sovereign wealth funds, central banks are all embracing it alongside gold as a way of storing money outside of the fiat system. So they're not wrong in that sense, but it's important to listen to someone like Larry Fink. He wouldn't be putting the reputation of BlackRock on the line if he didn't truly believe in this asset.
One more opinion that I want to run by you, and that is Jamie Dimon of JP Morgan Chase. He is still a skeptic of the cryptocurrencies. He's worried about money laundering. He's most worried about the fact that we don't know who owns the stuff. We don't know who Satoshi was. The fact that because it is anonymous, that bad actors are using cryptocurrencies to transact business. So what's your response to that, and how much of a concern is that to you?
I think everyone who's serious about crypto wants to see high quality AML KYC in the space. The good news in that front is that the G20 put in place AML KYC rules in 2021 on all major crypto asset service providers. And by the government's own statistics, the amount used in illicit activity is now very small. Could it be better? Of course it could be better. But I would say even in the case of JP Morgan, they recently announced that they will now do loans against people's Bitcoin and Ethereum. So they're counting them as valuable collateral that the bank will hold, collateralizing a loan that they'll make to that person for other reasons. So I think they're reflecting this changing nature of Bitcoin. One of the most challenging things with crypto is what I call anchoring bias, which is if you first encountered Bitcoin in 2013, there were real concerns about AML, KYC, anti-money laundering and know your customer rules. There were real concerns about criminal activity. But the industry has improved. It's more regulated. There are more standards in place. And crypto today is not crypto from 2013. It's a new space. And you're starting to see that even from JP Morgan as they integrate it more and more into their business offerings.
JP Morgan Chase just recently announced that the tokenization of private equity for clients. And I don't even know what that means, but explain what the tokenization of private equity means.
Well, let's start with tokenization in general.
Yes.
And the place to start there is by understanding how slow and painful the existing system is, right? When you buy a stock, you don't actually own it for 24 hours. If you buy it on a Friday, it doesn't settle into your account officially until a Monday. In the back office, there's a chain of middlemen, dozens really, that each have to move the asset from here to here. That's why it takes a day to settle these stocks. And in the case of a private equity transaction, that could take 30 days. What tokenization is you create a digital representation of that asset. So just like a stock trades with a ticker, you create a digital representation of that asset. But instead of moving it on that legacy system that goes through 10 parties and takes a day to settle, you move it on a blockchain-based network. And all of a sudden, the same thing that I said earlier about dollars. Remember, Ethereum can move money faster than JP Morgan, not a little bit faster. It can move money anywhere in the world 24/7 and have it settle in a second. You can suddenly do that with stocks. You can do that with private equity investments. What it does for a bank like JP Morgan, the reason they're excited about it, is it takes out a huge amount of cost. It allows those assets to transfer instantly and settle almost instantly. Maybe the best analogy, and actually our SEC chair, Paul Atkins, made this analogy, is remember when we used to trade stocks on the floor of the exchange with pieces of paper, and we were so excited when it moved to digital trading and we were trading in pennies instead of tenths, and suddenly they could settle faster. This takes that and moves it to infinity. Instead of settling in a day, they settle in a second. Instead of having a paper trail, it's infinitely audible digital trail. Larry Fink says every asset will be tokenized and people expect it. People underestimate how fast that will happen. I think it's not just private equity. I think in 5 years, we'll be talking about trading tokenized stocks and they'll be trading 24/7, 365, and it will all be built on these crypto networks.
So it used to be that there was a reason that it took so long to clear something, like a check, for instance, because one bank wanted to verify that the check in the other bank that they were going to honor was for real. So in this case, why is it so much better as far as verifying the veracity of what you're selling or what you're moving?
It's such a great question, and it gets to the heart of what a blockchain is. The reason the existing system is so slow, whether you're moving stocks or dollars, is exactly what you said. It's these multiple databases. So JP Morgan may have to check with Citibank before it can move this asset to there. How does the Citibank really know it has it? How does it get through the system? Maybe it goes through middlemen. It's sclerotic. What a blockchain is the ability to have one database that everyone in the world can see, everyone can access, but is still somehow always true and not able to be fraudulently manipulated. And when you have one database, all of that friction goes away. All of a sudden, you can move a stock from JP Morgan to Citibank as fast as you can change one line in an Excel document. The reason Ethereum can move money faster than JP Morgan, even though JP Morgan has 300,000 employees or whatever, and Ethereum has 0, is that Ethereum is one database globally that everyone can access. And the magic of blockchain, and it's a relatively complex technological explanation how they figured it out, but the magic of blockchain is the ability to have that one database that everyone can access. And so you can move any asset as fast as you can change one line in an Excel document.
Matt, if my dad, who is no longer with us, were listening to this conversation, he would be saying, oh great, everyone can access it? There are a lot of bad actors out there, so what's to prevent them from accessing this database?
Yeah, that's exactly the magic of blockchain. It is protected by the fact that there are, in the case of Bitcoin, millions of computers, in the case of Ethereum, millions of independent stakers that all are incentivized to act honestly. And there's a way of catching them if they're not honest. I'll give you a simple example. Over the last 10 years, Bitcoin has processed $125 trillion of transactions, trillion with a T. There's never been one fraudulent transaction on the Bitcoin network, and it wasn't sent from a wallet that owned it to another wallet. They've all worked perfectly. The banking system can't say that. So the way it's protected is through cryptographic math and the work of a large number of people being focused on it. But importantly, people often wonder, like, how did Satoshi create Bitcoin? Did he just generate it out of... The reality is, if you worked backwards from Bitcoin, there was about 30 or 40 years of computer science trying to figure out how to solve exactly the problem that your father raised. How do you have this one database that's always true and can't be hacked, but everyone can access? It sounds nearly impossible. It was nearly impossible. It took, again, 40 years of computer science research. Satoshi was the first person to put it together. Others have built on it since then, and it's, again, been working perfectly for 15 years with trillions of dollars on the line, so we can have high confidence it will continue to work in the future.
We know that there are, rooms full of very smart programmers and computer hackers in bad places that are going to try to break into this perfect system. Why are you so confident that they will not do that?
Yeah, absolutely. So it's actually a law of large numbers. We'll take Bitcoin as the simplest example. The way you would hack the Bitcoin network, the only way you could hack it, is if you had 51% of the computing power that processes those Bitcoin transactions, 51% of the mining network. The reason I say it will never happen is that is by many orders of magnitude the largest supercomputing network in the world. It's like 1,000 times bigger than the 500 largest supercomputers because it's millions of high-speed high-speed specific chips doing this one thing. Even a nation state wouldn't be able, I think, to build up enough computing power to overwhelm that network because it's so large. In the early days of Bitcoin, when it was just a few people maintaining the network, it was hackable. But now that it's the largest supercomputer network in the world, it would be exquisitely hard to do so.
You are known as an expert in the ETF industry, as well as in the crypto industry. What are the kinds of products, the crypto products that we are going to be seeing rolling out, let's say, in the next couple of years?
I previously told someone I think it's going to be crypto ET-palooza. We're going to see 1,000 crypto ETFs. The SEC has really opened the gates. So you're going to see single asset crypto ETPs beyond Bitcoin and Ethereum. We're going to start to see some of the smaller assets launched. You're going to see index funds launched. You're going to see strategies that do option overlays, that do downside protection. What I would say for most investors is what we've talked about for ETFs for a long time, that the flashy stuff is exciting to talk about, and the simple stuff is exciting to invest in. I think most of your portfolio should be in boring investments. That's diversified equity indexes, diversified bond indexes, diversified crypto indexes. You're going to see a lot of exciting stuff, razzle-dazzle, come out of the crypto industry. I would be very selective about how much razzle and dazzle you want in your portfolio.
What are stablecoins?
Stablecoins are going to enter your day-to-day life sooner than you think, is my guess for your audience. A stablecoin is a digital dollar that moves over a blockchain instead over the traditional banking system. So just like you might create a money market fund that moves like a stock, you can take a dollar and create a tokenized version, there's that word again, and move it over Ethereum. Why would you want to do it? Well, there are a lot of reasons. If you're abroad, if you're in Argentina, if you're in Turkey, if you're in Nigeria, the ability to access dollars with your cell phone at the push of a button in an instant is a game changer, right? You would rather store your money in the US dollar, the best fiat currency, than in your local currency. But even here at home, now that we had Congress pass crypto stablecoin legislation, making them legally useful for payments, I think you're going to see them penetrate your everyday use cases. I'll give you one example quickly. If Amazon offered you a 4% discount to use their stablecoin instead of your Visa card to shop on Amazon, would you? I think a lot of people would say yes. And I don't think we're that far from that sort of disruption taking place broadly in the market.
Wow. Let me ask you about just a couple of other things and tell me if this is a real trend. That alts outperform Bitcoin?
Yeah, so alts in crypto means everything but Bitcoin. Bitcoin
Okay.
is the big dog, it's gold, so everything from Ethereum on down. We've seen varied performance is the thing. The thing that's really exciting about the alt space is a lot of what we talked about today is built on those assets. Stablecoins are built on Ethereum and Solana and a few other. Tokenized private equity is built on Ethereum, Solana, etc. So every time you hear the word stablecoin or you hear the word tokenization and you want to invest in that trend, the answer is those altcoins like Ethereum, Solana, etc. So I do think their outlook is quite good.
Talk to us about Bitcoin miners and why they're rallying on AI.
Those are like luck upon luck. Bitcoin mining has been a great business because these are the companies that build installed chips with low-cost power and use that power to mine and generate Bitcoin. It's been a great business because Bitcoin has been going up 60% a year. What's the only thing that's growing as fast as Bitcoin? It's AI demand, and these companies are the best in the world at building data centers with low-cost power. There's now infinite demand for that from the AI megascalers, and so what you're seeing these Bitcoin mining companies do is, yes, they keep doing Bitcoin, but they're also using the same skills to build AI computing centers. And not surprisingly, the returns on some of these stocks have been amazing because they're in two really high growth industries at once, almost by accident.
Is there a Bitcoin miner that we should be buying, Matt?
There's some diversified Bitcoin mining ETFs out there. We have a crypto equity ETF that includes the miner. It's BitQ.
Is there an NVIDIA among the Bitcoin miners? I mean, is there one that has a leading?
You've seen Iron do really well, but I like the field. Again, I invest in all these really exciting areas like crypto,
Right.
like biotech, but I'm a boring investor. I just buy the index. So
Yeah.
I do like the index, but Iron has done really well.
So Matt, with all of the things that we've talked about, what would the one investment for a long-term diversified portfolio be to participate in this brave new world?
I would push the easy button. The easy button in crypto is to own a diversified crypto index fund and own it for the long term. That way, no matter what happens in this industry, you're always exposed to the largest assets in the world. The same way you would buy the S&P 500 for your equity exposure, I think investors everywhere should consider adding a diversified crypto index fund as a core holding for their portfolios going forward.
The oldest and the largest is the Bitwise 10 Crypto Index Fund.
We've been running it for 8 years. It has a strong track record, the longest in the industry, and I do think it's best in class. So that's one place investors might look.
Matt Hougan, what a treat to talk to you. I don't know how you keep up with all of this stuff, but thanks for at least attempting to bring me up to speed and into your world. It certainly has paid off for investors. Matt, thanks again for joining us. I look forward to talking to you next year, if not sooner.
That's awesome. Thank you for having me, and absolutely, we'll do it again next year.
At the close of every Wealth Track, we try to give you one suggestion to help you build and protect your wealth over the long term. This week, we are asking our guest to share the best investment advice he has ever received. So this week's action point from Matt Hougan is, don't try to find the needle in a haystack.
I was fortunate enough to know Jack Bogle, the founder of Vanguard, and he said an aphorism to me, which he'd said to others, but he did say it to me, so it really stuck with me, which was, don't go looking for the needle in the haystack, buy the haystack. And that's been such phenomenal advice, whether you're talking about the broad equity market, or you're talking about a specific industry like the internet, or even you're talking about crypto. In many cases, you're best off just identifying the trend and then buying the basket. And that's what I do in my own personal portfolio. So thank you, Jack, for that.
And how much does it matter who puts the basket together?
It matters a huge amount who puts the basket together. I actually edited a journal called the Journal of Indexes for 10 years. So amongst the world's people, I care a lot about it. It matters even more in crypto because this is like a frontier or emerging market. It's not just taking the 10 largest assets and putting them into an index. As an example, our Bitwise 10 assets, the 10th asset is about the 20th largest crypto asset. And that's because there are 10 assets we don't think are appropriate for institutional or professional style investors. We don't think meme coins are appropriate to invest in, as an example. So you do want, particularly when you get into frontier or emerging themes, you want deep expertise on the inside from a specialist. That's one of the reasons I think our index has resonated with people.
Vanguard's founder, Jack Bogle, created the first index mutual fund for individual investors in 1976. The Vanguard 500 Index Fund, which tracks the S&P 500, is still going strong. Next week, Barron Opportunity Fund's top-rated portfolio manager, Michael Lippert, assesses the investment potential and risks in the AI-driven tech boom. Please follow us on Facebook, X, and our YouTube channel. Thank you for taking time to visit with us. Have a lovely weekend and make the week ahead a healthy, profitable, and productive one.